All right, and still talking about the Naira at this time, we've seen the central bank has did issue a circular to BDC operators, informing them of a new amount they're going to be selling. That's a new price for the dollar, 1,101 Naira. So we've seen a lot of moves by the central bank in the market to defend, the Naira. So it's come a long way from about 1,800 Naira to dollar, and we're here now at the official window, and it might even get cheaper at the parallel market. Let's join us now is Charlie Robertson, head of macro strategy, FIM Partners, joining me via Zoom. Great to have you on the show.
Thank you very much for having me back. I appreciate it.
Fantastic. So how you see the recent moves by the CBN, to defend the Naira? We've seen a big appreciation there from about 1,008 to this levels we're seeing now about 1,200 Naira to the dollar.
It got ridiculously cheap. I was explaining about a month or so ago that it was the cheapest currency in the world, on a par with Japan, by the way, but Japan's got all of its own issues and is desperately trying to keep it super cheap. So 40% cheap on my model, that's not normal. And the central bank knows that the currency is so important for kind of anchoring inflation expectations that if you're selling tomatoes, you might be thinking, what price should I be selling tomatoes at based on the dollar Naira rate. So they understand that getting a more realistic value for the Naira, and I think it is getting more realistic now, was a good idea. A good idea to get inflation down, a good idea to restore business confidence. They just didn't have the means to do it until a few months ago.
Right, and looking at this price right now, would you say the Naira is still heavily undervalued at this price?
It's still the second cheapest in Africa after Egypt. And Egypt's like 30% cheap. Naira is about 27% cheap to a kind of a long-term average of what the Naira has been in today's money. So it still does look cheap. I mean, fair value is not a great concept, but the average rate in today's money of the Naira, stripping out the impact of inflation, has been about 900 to the dollar over the last 25 years. So 1,200, 1,300 was still cheap.
Right. All right. Paint a picture of what you think it's costing the CBN, that's the central bank, to keep the Naira strengthening from those really low levels.
We've already seen reserves drop about $1 billion. This is the 30-day rolling average reserves. So it could be more than that, of course, a bit more than that. So they're definitely pumping in a chunk of money. To some extent, they should. I mean, when the dollars come into Nigeria, but particularly through the oil trade, which is the biggest export earner for the country, as you know, the central bank gets those dollars. So if anyone's going to supply dollars, it's going to come via the central bank. So there's an element of saying, okay, we're making this on exports. Let's deliver some of this dollars to the market so that anyone in Nigeria can get access to them. So yes, they're spending it. I'd be more comfortable if the reserves were rising or at least stable. So it's a bit concerning that they're down this much.
Right, and talking about that fair value of about 900 Naira to the dollar, what do you think it will cost the central bank to actually get it to that level? And is this sustainable, the interventions we're seeing from the central bank at this time?
I wouldn't aim for fair. I wouldn't aim to keep it at the average. So the work I did in the Time Traveling Economist that came out a couple of years ago was showing that countries with small banking systems, and if you look at bank deposits in Nigeria to GDP, it's about 20-25%. So that's quite small. Countries with small deposits tend to have high interest rates, and those high interest rates slow growth and hurt the economy. So the way to resolve that, or one way to offset that and to reduce those interest rates, is to run a current account surplus and export more than you're importing. And obviously, it helps to have a cheap currency to do that. So if I was advising the central bank, I'd be saying aim for it to be 10 to 20% cheap, 1,000 to the dollar, maybe 1,100 to the dollar. That would be an appropriate measure. And the current account will be in surplus then, probably, should be. And as a result, reserves can then be picking up, and that improves creditworthiness of Nigeria and the way the rating agencies look at Nigeria. So you start to get credit rating upgrades, a sustainable currency level. I think it's a decent combination.
Right. And talking about the BDCs, we see the central bank selling dollars today about $10,000 each at about 1,101 Naira to the dollar. That was the latest announcement. So that's going to roll in very soon. But do you think the BDC operators are satisfied, with the intervention by the CBN at this time?
I suspect what the CBN is trying to do via the BDCs is to get popular buy-in, to try and get everybody in Nigeria to recognize that that time of extreme weakness in the Naira is over. And they're using the BDCs to help push the parallel rate stronger and using that to then pull the official rate stronger too. So I think the BDCs are a pretty important part of the story, which is quite encouraging because it's allowing kind of the private sector to be playing some role at the same time as the central banks obviously playing a very significant role.
And talking about, the private sector, we did, I'm sure you've been following the story about Binance. They did clamp down, the government did clamp down on their P2P trades. That's they're trading the USDT, that's a stable coin, and they've been accused of, speculation and, manipulating the Naira. And ever since, Binance P2P exchange got clamped down on, we've seen the Naira actually strengthen. So do you think these crypto exchanges really do play against the currency of a country?
I don't know enough to opine on that specifically. All we do know is that when Emefiele did his currency restrictions, Bitcoin in general, crypto became a very popular way for people to move money in and out of Nigeria. And the difficulty with that is that when it stays in Bitcoin, it's not sitting in bank accounts in Naira, which gets lent out to the real economy, or in dollars, which potentially gets lent out to the real economy. It's just kind of out of the economic system. So it's not helping. It doesn't help on investment. It doesn't help on growth. So I don't think it's been helpful for Nigeria as a country, while it has been helpful to protect people's savings at a time when they couldn't move their money at a sensible exchange rate. So I think the story's changed now. I think what the central bank's saying is that you can now trust the currency, you can be involved, you don't have to be using Bitcoin, and in fact you shouldn't be, and the accusations against Binance perhaps are part of that. But I don't think it's in itself the biggest story. I think the biggest story is the central bank cleared the official arrears it was prepared to accept and could then use the current account surplus that we're seeing each month to start intervening in the FX market to enable the currency to rally. I think these were more important.
Right, and we see the Naira has been rallying at the official window. Do you see any key resistance levels for the Naira?
No, I don't. And I do tend to look at these kind of trend lines, resistance levels and so on. I don't see that. I think the volatility has been so big in the last few months that they don't mean very much.
Right. So at this point, we don't see any resistance levels for the Naira strengthening. But we did see the World Bank, forecasting that Nigeria's inflation will fall to about 24% in 2024. How are you seeing this forecast?
It sounds plausible. What the difficulty here, and the IMF just did a paper on this about a month ago, is that when currencies sell off, they did a research paper on sub-Saharan currencies, and when currencies sell off, they really feed through into inflation. So as the currency's weakening, you see inflation picking up. When the currency strengthens back again, it has almost no beneficial impact. If it looks like people who are selling imported goods raise the price, when the currency is weakening off, but when the currency is strengthening, they take the profits. They don't deliver the price cuts that they could on the items they're selling locally. So it's going to take a while to get inflation down. And I think the World Bank figure of 24% fits with that. Because actually, if you've got the currency going from 1,600 to 1,200, you should be expecting prices to be dropping by a quarter. But that's not happening, I doubt. And we will see when the inflation figures come out. So it takes a while, but next year's numbers, double digit maybe, but somewhere to 10 to 15%, 2025, that would be very interesting to see. and very encouraging.
Yeah, definitely very encouraging. Seeing food inflation already way over 35% at this time. But seeing the wins with the Naira at this time, with the interventions we've seen from the central bank, is it easier to control currency devaluation than taming inflation from what we've seen in Nigeria?
I think that yeah, it's going to be quicker, definitely much quicker to stabilize the currency, to get inflation down. Is it easier? I think they're related to the same thing. That point I was making earlier about bank deposits being quite low, it also means that bank lending is quite low. So in the West, people are up to here in debt from mortgages and consumer credit cards and all the rest. That's much less of a story in a lot of frontier economies, actually. So as a result, you move interest rates. A lot of people don't have a big loan that they're impacted by. It doesn't have that same slowing down effect on demand and therefore on inflation in a country like Nigeria. So the exchange rate becomes probably the most important way to get inflation under control. When you've lost control of the currency, then you've also lost control of inflation. But that's the central bank's getting control back, I think, on both at the moment.
All right, I know you're the traveling economist, so I want you to travel and see what's coming for the end of 2024 for Nigeria. Do you see some kind of soft landing or no landing for the economy, or hard landing?
The difficulty there is that I think the second most difficult thing to forecast is the oil price in the world, and that's doing quite well in the last 2 months. I think it's telling us that the world economy is getting a little bit healthier. And if we can keep oil at around $90 or so through the course of the year, then that's going to be quite supportive of Nigeria getting its, say, 3% growth. The trouble is that 3% growth is not what we want to see in Nigeria, right? We've got population growth running at 3%. So in real terms, per capita terms, people are not getting better off at 3%. What we want to do is see that picking up to 4 or 5%. For that, we need better investment numbers. Stable currency helps. So I think the bigger question is, we go into 2025, assuming the West has avoided a recession. If oil can stay around $90, interest rates have come down. Is that when there's got to be a decent chance that Nigeria starts to look like a stronger 4% growth, or even better maybe in 2025.
All right, definitely looking out for it. Thank you so much. Always great having your perspective. Charlie Robertson, Head of Macro Strategy at Firm Partners. Thank you so much.
Thank you.
All right, we'll take a break now. When we come back, we head straight to the markets with Anete Ede. That's at the moment. Just stay with us.